our very first chapter for this course. So the first chapter is an introduction to the managerial accounting. So basically, we are going to cover some concepts, like basic concepts in this domain. So in this chapter, we are going to catch 5 learning objectives. So we are going to first differentiate between the financial accounting, which you already took, and the managerial accounting, right, which is the theme for this course. And then we are going to talk about the 3 major types of firms in our in today's business world. So we have service firm, merchandising firm, and manufacturing firm. And the third one is very important for the whole semester, which is the cost classification, and it's the foundation for your later chapters. And then we are going to review a little bit about the income statement and how we prepare an income statement for the 3 types of firms, right? And then we are going to calculate cost per unit. So as for financial accounting, so how many of you think you did well in financial accounting? Okay, most of you, good. So that motivates you to take this class, right? Okay. So as we mentioned last time, we said that there's one fundamental difference between financial accounting and managerial accounting, right? Which is in terms of the users, right? So we say that the financial accounting focus on the what types of users?
Financial external.
Yeah, financial is external users, right? Yeah. Okay. By the way, currently I do not allow you to use laptops, so please turn off your laptops and just focus on the class, right? And I will let you to use computer when I take attendance and when I cover the Excel project. But now let's just focus on the class, okay? Right. So the financial accounting focuses on the external users, right? So what are the examples of external users? Who are the external users? Name card, please. I can ask this.
Rain. Investors.
And
Like
Geo.
creditors, like the IRS and creditors.
Yes, IRS, which is the kind of regulator, right? Investors, shareholders. Yes, shareholders.
Creditors.
Okay, creditors. Right. So those are all the examples of the external users, right? So as investors, if you purchase stocks, what we look at is the financial reports released by the firm, right? For example, for the 2018, we're going to see Apple's financial statement, right? About their revenue, about their, so you will judge the growth potential based on their financial reports. And also the creditors, for example, banks, will look at the financial reports of the firms to decide whether or not to give loans to the firms, right? And also, as Gio mentioned, regulators, for example, the IRS, SEC, all they look at is financial reports, right? So that's about the users of financial accounting. And then the goal of financial accounting is obvious, right? Because the financial accounting is for the external users for them to make related decisions. For example, to make investment decisions, to make credit decisions. Right? So that's very intuitive, and that's what we learned in our financial accounting. Okay? So what about managerial accounting? Right? So yeah, managerial accounting, instead of focusing on the external users, we focus on the internal users, right? So yes.
Managers.
Yeah, managers. Managers are one type of internal user, right? And what else? Yeah, Amanda.
Bosses or employees?
Yeah, employees, right? So those are examples of the internal users. So as we covered for the very first class, we say that the managerial accounting basically provides the internal users related information for them to make related decisions, right? And the decisions are basically related to their internal business decisions, especially the planning, right? So we said that, so last time I asked many of you, right? You said you want to start your own business. So we say, for example, if you are going to start your own business, you first will have a plan, right? For example, I want to achieve a market share of 20% in this area, right? So that's your plan, that's your goal. And then you use the information to coordinate or to direct the performance of your firm, especially when you have multiple departments, right? Because you need to make sure that different departments will work together to achieve your plan, right, your goal. So that's the other type of decision that internal users will make. And then the third type of decision is about the control. Basically, this covers that when you have a plan, right, and then you carry the plan out, you will have your actual performance. And at this time, you compare the actual performance with your plan and see whether there are some discrepancies, right? So if you find that you didn't meet your goal, then you need to find out why, right? And if you are lucky that you achieve your goal, then you still need to summarize why you make it, right? So that's the three types of decisions that managers make, right? Plan, direct, and control, okay? And so for this aspect, focus, it means that for financial reporting, the financial reports needs to cover the relevant information. For example, we know that on the balance sheet, right, we have assets, we have other types of accounts. So those are the relevant information that external users want to know, right? So we need to cover the relevant information. And also, the numbers, for example, the value of the asset needs to be faithful, meaning accurate, right? So that's the focus of the financial accounting. And when you read a financial report, let's say balance sheet, so what's on the title? What's on the title of a balance sheet? Okay, you have name and then the date. Right? For example, it's for the year ended 2018, December 31st, right? So the time frame is in the past, right? For example, if we read the financial reports of Apple of last year, it is a summary of the performance of Apple in that year, right? So the financial reporting is focusing on the past performance of the firm, right? So the time frame for financial reporting is in the past. And so because the financial reporting is prepared for external users, the external users need to have a benchmark to compare the information from different firms, right? So if I say that, if I describe an asset using the name, using some name, and another firm describe asset using another type of name, then we cannot compare the information, right? So if we want to make information comparable, we need to follow a set of standards. So for financial reporting, you basically need to follow the either GAAP or IFRS or Sarbanes-Oxley, right? And GAAP, what is GAAP?
The accounting
Generally accepted accounting
practices.
principles. And IFRS, International Financial Reporting Standard, right? And Sarbanes-Oxley, right? So this one was carried out after the Enron scandal, right? So for the financial reporting, we need to follow those rules. And so if you are going to be an auditor, right, the auditor's job is going to check whether the financial reporting follows those rules. So that's about the financial reporting, the focus, the time frame, and also the rules. So about managerial accounting, so same as the financial reporting, we still need to provide relevant information. But instead of focusing on the accuracy of the numbers, we focus on the timeliness of the information. So it doesn't mean that we do not need accurate number, but it means that we need not only the accurate number, but also more timely information. Because the managerial accounting is for managers, for internal users, to make business decisions. So we need to have more frequent information to achieve this. And therefore, the time frame, the focus of the information is for the present and the future, because that's what managers care about, right? Because they want to make future decisions about, for example, where to invest the project, whether or not to drop a department which is not making a profit, right? So the time frame of the managerial accounting is the present and the future. And because the managerial accounting is for the internal users, we don't care about whether the external users understand or not, so we do not need to follow the standards as long as the information is understandable and useful for making internal decisions, right? So does this make sense? Because it's for internal users, we don't need to follow a set of rules required by external users.
Does like each individual company make their own rules?
Yes,
for them?
yes, as long as it's useful for them to interpret the information and to make decisions. Yes. Okay. And for the scope of financial accounting, right, because if you read the financial reports, so how many of you have looked at the financial reports, a real one? Just the 3 of you? Okay. So if you are going to work in this area, I guess when you start your career, you are going to read a lot. So when you read, let's say, Apple's financial report, it's usually about the summary of the whole firm, right? Meaning including different departments, including different types of products, right? So basically, the Apple's financial reports include, let's say, iPhone's performance, iPad's performance, Mac's performance, right? So they integrate together. So it's called a firm-wide summary. And the financial reports usually are released quarterly or annually. So that's not very frequent, right? So it's released at least quarterly. And in comparison, for the managerial information, we can focus on the components of the firm. For example, for the Apple, right? The managers just want to look at, let's say, the iPhone's performance. So we can just prepare the related information about the iPhone to the manager, right? And if they want to look at the performance of the, let's say, the HR department, right? We can just look at for that part. So for the managerial accounting, we do not focus on the firm-wide. We can look at the components of the firm. And the frequency of the information is more frequent. So we can get the information daily or weekly because the managers need timely information to make decisions, right? And for the behavioral concerns, so behavioral concerns means that the human behaviors can have some impact on the financial reporting or the managerial accounting practice. So for the financial accounting, the behavioral concerns are always about whether or not the financial reporting covers the adequate information that they should cover, right? Let's say the firm has some assets that needs to be put on the balance sheet, but sometimes maybe the firm put a higher number, right, on the financial report. And also sometimes they miss something on the financial report. So here we care about whether the information is adequate on the financial reports. And then the other issue is about the agency issue. And this one we will cover this in later chapters, but the basic idea here is that managers have different incentives than the investors or creditors. So one example could be the managers tend to accept projects that have high risk and have high return in the short term, but this will hamper the investors' benefits because the firm value may decrease because of this high risk project. So this is just one example of this agency issue. And we're going to have some further talks about it in some later chapters. And then for the behavioral concerns in the managerial accounting, we basically consider whether the information will impact on the manager's decision making. And also there are still some agency issues between the managers and their managers. And we're going to talk about it when we study the budgets. Okay? So if you cannot understand it for now, you don't need to worry too much because we're going to have some further discussions. And also, the managers should always consider their decisions to the related stakeholders, right? For example, if they decide to drop a department, then maybe it will have some other impacts on the products or their business. So that's a holistic comparison between the financial accounting and managerial accounting. And in your textbook, you have this table which summarizes in detail of what I just covered, right? So in every aspect. So let's practice by using clickers, right? So now let's start with clicker question. The channel is 41. It's not on? Okay. Wait, hold on, I'm refreshing this. Okay, now it's on.
Okay, you get rid of that.
Okay, sorry.
What's the channel?
41. Which is not the characteristic of managerial accounting. So is everyone in? Is everyone who has a clicker in? Okay. So today we are just experimenting, right? So I also need to check my device. Okay. I think we will start. Yeah, because just now I made a mistake. But let's look at this question. So, do you have any questions about this? Which is not characteristic. So, can someone volunteer to explain why the other three choices are wrong? Yes.
They're examples of what managerial accounting is, and like what they do. That's why the other three are wrong.
Yeah, so B is details about parts of the firm, right? We just covered, right? So we say that the financial accounting focuses on the firm-wide information, so we don't look at the components of the firms, right? But for the managerial, we can look at the parts of the firm. And also, both financial and managerial accounting focus on the relevance of the information. And the managerial accounting focus on the future, but the financial focus on the past, right? So that's very easy. So, the next one, which of the following is the primary focus of managerial accounting? Everyone in? Okay, so the correct choice is the first one, and most of you got it right. So, so some people choose C, right? Let's see, providing summarized results of operations. So who can explain why C is not the right choice?
Because it's
Yes, sorry.
It's actually looking for more detailed information which can help you in your managerial role to take a decision. So a summarized result is not going to be a really efficient way to take a decision.
Right. Yeah, that's what's your name?
Abigail,
Oh yeah, Abdurrahman.
Yep.
Yes, yes. So I was practicing to remember your name. So yeah, that's why I need you to put your name card so that I can remember. So so that's the first learning objective, right? The comparison between the financial and managerial accounting. And that part is the basic one. And then next we're going to talk about some ethical issues in the managerial accounting. So let's look at this situation. Let's say that you are an accountant, right, working in a firm, and your manager came and told you that two customers have placed orders that are scheduled to be scheduled on January the 3rd, the next year. And let's record the goods as finished and bill the customer on December the 31st so that we will show the profit from those orders in the current year. So let's review a little bit of what we learned in the financial accounting, right? So currently, we use accrual-based accounting, right? So what does it mean by accrual-based accounting? Yes,
Every time a service is made, you record it even if cash isn't received.
say it again.
Every time a service is made, you